Good morning. Welcome to the market report for Northeast Florida. I'm Jamie with Property Bear. Hopefully, you had a great Thanksgiving. If you're a Jaguar fan, you had a great Thanksgiving and a great Sunday. Today's November 28th, so let's go over the economic news we're looking at this week. So, obviously, there's like Fed speakers and stuff like that, but in regards to housing or mortgage rates, we've got the Case-Shiller Index coming out Tuesday, and then the FHFA Pricing Index also on Tuesday, 9 a.m. Consumer confidence, 9 a.m. Let's see what else we've got. Real GDI, real GDP Wednesday, job openings, quits. All right, so Wednesday, 10 a.m. pending home sales index. That'll be interesting. Keep in mind the federal or the national numbers are going to be like a whole month behind. So like we're November 28th. That's everything until October. And if you follow our social stuff, we basically take whatever gets posted on a national scale and then compare it to our local numbers. So far, we're beating all the national numbers. You know, being in Florida, one, and two, Jacksonville didn't get kind of overbought like other markets did, so kind of puts us in a better spot. So Thursday, jobless claims. The reason jobless claims and all that stuff is important is to us is because what happens is if numbers come in too hot, the Fed has the I guess confirmation to go more hawkish and raise the rates more. Right now, I think everyone is estimating, I don't even know the exact number, but there's like probabilities on it. I think it's like 70% chance that it's a 50 basis point hike that's coming for the next one, which is kind of toned down from the 75s. So that's how it affects us. Construction spending is Thursday. Motor vehicle sales, if you're interested in that, also Thursday. And then the unemployment rate is Friday. Again, that number is going to come into play as to what the interest rates are going to be. So that's what we've got coming up. Let's go ahead and dive into our numbers. So these are on the weekly. You're going to get another one on, I don't know, this week. I'm going to do it again for the monthly numbers. And then we'll dive a little bit deeper into the different markets. But for right now, this is everything in Northeast Florida, new construction, everything. So right now, we are at 345. And remember, because of a lack in data, you've got the less closings you have, the more volatile this is going to look. So I wouldn't, if you're trying to do technical analysis on this, I wouldn't do it. So 345, and with this, from a median weekly standpoint, your high was still May? Yeah. On the monthly, you're seeing highs in June and July. But 381 is that number. And so what's that, $36,000 down? So still year over year, you're looking at increases, even with a pretty crazy drop from whatever this top is. So let's look into closed sales. So closed sales almost doubled, and this is the thing. This is why we say don't give it too much credit on a weekly basis. Just look at the overall trend. That's my thing with like some of the financial news outlets that talk about. I'll give you an example. Distressed listings are under 1%. If we hit 1%, they would say that, foreclosures are up 1,000%, right? If we're at 0.1% up to 1%, that's a 10x. That's what it would read, even though it's still less than 1%. So yeah, closings basically not doubled, but like what is that? 40%, 60%? Big jump. So, but again, keep in mind we had that hurricane. Less people were closing because you couldn't get insurance bound. So that that last week obviously looks like an outlier, but we'll keep following the trend, see what happens. Median sold price per square foot. If you're trying to price your house in general, I wouldn't use this. This is just to kind of get a little bit closer to instead of looking at the median price overall, if you look at the price per square foot, it kind of gives you a thing. Here's the thing. Nobody believes realtors. I get it. 95% of them are pretty terrible. But I will say that when you hear them talking about, prices going up in the winter because of low inventory, it's true. Like you can literally watch it happening, starting to curl up here. So keep that in mind. Let's look at percentage of cash sales. It's probably still over 25%, if I had to guess. 20,000% increase. That's funny. So we're at 31%. So 1 in 3, a little bit less than 1 in 3. Closing cash. A lot of that, we'll break it down on the monthly to look at this a little bit more closely, because I think it's being concentrated in 2 price points. New pending sales, that's one of the ones that's coming out from a national standpoint. Yeah, so you can see that trending back up too. Is this going to skyrocket up to here to these May numbers? I don't think so. I think we land somewhere around here where we're kind of consistently, 400 to 500. Well, that's where we're at right now. And we just kind of live there for a while, just because it's not because of demand, but it's more because the real inventory isn't there. And keep in mind, these pending sales don't take into account institutional purchases, build to rent, developments, any of that stuff. So that's something to take a look at. All right, our median days on market. And keep in mind, if you're selling something, whether it's a flip or personal property or whatever, have somebody run the averages for your market, because the median for your neighborhood or whatever, because the median is not going to do you any good. All right, steep drop, 18% drop. Seller's market again. Just kidding. So I think, in my opinion, this is hurricane related. I'd rather look at the monthly on these also, but again, it kind of gives you a trend. We are definitely trending up on days on market. When I started, days on market was like 95 to 150. So this is still really fast to sell a house. Let's check out our active inventory. Yeah, so we're starting to kind of like level out. Like you can see it was like a pretty rapid increase and then dip, and then we're kind of like probably flat line around 7 to 8,000. Will a whole bunch of inventory come on the market? I don't see why it would. From a distress standpoint, again, we just don't have it. It doesn't exist. 0.1%. I mean, the distress level is crazy. It's so low. We just don't have, the foreclosures aren't coming. And from a resale standpoint, and I keep stressing this week over week, these are basically family heirlooms at 3% mortgage at this point. You know what I'm saying? Like they have no reason to sell these properties, so they're not going to come on the market. So what's all this mean from a weekly standpoint? What we're looking at for, let's look at retail buyers. If you're a retail buyer, you can qualify for a mortgage, you can get some pretty good incentives, because a lot of your builders, and I'm only mentioning builders right now because the sellers, there's just not a lot of good inventory out there. Like if you can find a remodeled house, like buy it, because the second that these interest rates drop again to anything substantial, I mean, I saw another headline that said mortgage rates dropped like 20%. Well, from 7% to 6.25, it's a decent deal, but it's not 4%, or 3%, right? So, just as soon as those headlines come out, you're going to see, mortgage applications go up. I think last week they went up. I'm working on getting those numbers because I want to see those too. One of the mortgage teams we work with, but just keep that in mind. I mean, if you're a retail buyer and you can buy, like, don't. If you're sitting on the fence, you guys already know that my prediction is that by summer of next year, we're going to be in Frenzy 2.0 all over again. Maybe by fall, which kind of works out perfectly for us because that's when most of our new home inventory is going to be coming online. But yeah, that's just my prediction. Let's look at what the rates are. 700 to 719 with 20% down. It's like 7.5%. Let's go 740. Because I think that's what all the advertisements are based on, right? 740. So 30-year fixed, you're at 6.8, so it's sub 7 again. And then looking at this, I always like to pull the daily versus anything else. But you can see that it's like starting to trend down. Everybody's saying that mortgage rates are going to keep going down. The thing is that it's a catch-22, right? Because, and I remember this from 2010, 11, 12, I couldn't find money. Well, I was also 22, getting out of school. Nobody would listen to me. But I was like, we need to buy all the houses possible, right? But at 22, nobody's going to lend me $10 million to go buy all these houses. Well, now you can find money anywhere, and you can't find the houses. So, and we've gotten really picky about what we're buying. So if the inventory's not there for us to buy, and we're trying to buy stuff to fix up and resell or whatever, or even develop, like something's going to have to give at some point. But basically, retail buyer, that's kind of the position you're in, believe it or not, whatever. Retail seller, again, you have no reason to sell. If you have a secondary property and insurance rates are getting high or whatever, you can still consider selling. It's still pretty good. I would say that probably if we're right, because with recession, what does the Fed do? They ease up. And when they ease up, mortgage rates go down. So, 11, 12, 13, 14, you could get a pretty low interest rate. But most people couldn't qualify. Why couldn't they qualify? Oh, because we're in a recession. Got it? Catch 22. If you're a smaller investor, be picky about your deals. Let the wholesalers play their game and unfortunately burn the customers, because we're starting to see it more and more where like they can't get rid of deals. But from our standpoint, from a smaller investor, buy, flip, buy, hold, and we haven't found anything that we're like, okay, we're going to hold this one. It just doesn't. We want some bigger stuff to hold, and the deals don't seem to make sense yet for us, because we are smaller. Bigger, I think those deals are probably out there. But on the smaller side, just make sure the deals make sense. There's no reason to push it, especially right now. If you're speculating, for those mortgage rates, for that, that frenzy 2.0 on the buyer side, I think it's summer or fall of next year, basically rate related. And on top of that, you're going to start seeing local governments kind of do what they're trying to do in California, which is stimulate building. Because right now, the builders are not incentivized to build fast. And so like what happened to us with Breeze Homes is you've got the frenzy going on, but we literally, because of supply chain, can't build these things fast enough. So we didn't miss the wave. We sold a bunch of houses, which is great. But now we have this inventory that's coming online, and we know that there's not a lot of inventory competing with us. We're also very fortunate in that we have probably the best price new construction in our market. So what happens is we can kind of release it slowly and sell it as it goes. But on the build side, there's no sense in building a whole bunch, just to hold a whole bunch of inventory, because we know what's coming. So when that's there, we'll basically release it at that point, because it's going to happen, right? And the pain that, people are feeling nationwide or here, people are feeling everywhere. It's just cheaper to feel it here in Jacksonville. So let's go back to these. And I think that's basically all we've got to check out. If you're an institutional buyer, you have no competition right now. again, you're kind of stuck in the same boat where there's not a lot of inventory to kind of choose from that matches. And I will say that the open doors and the offer pads, I've been watching their, the stock charts for them and stuff, and they're collapsing. And it's funny because I've never really thought about it, but like going back to look at the deals that we've done with some of the iBuyers, they overpaid a lot for a lot of houses, and we know they did, and they didn't know they did. And then the houses that they turned down, right? They should have taken. It's really strange because there was equity positions in the ones they turned down, but no equity positions in the ones they took. So that was pretty awesome. Not for them, but for our retail customers. But yeah, so institutions should be in a pretty good spot to pick some houses up before frenzy comes up. So yeah, that's all we've got. We'll wait for the monthly to come out later this week, and have a good week.